Today's stock market heat map was filled up with a bunch of green. I mean, even if you take a look at stocks like Hawaiian Electric, which is still under investigation for the fires in Hawaii, even they rallied up tremendously today. But in confluence with that, we're also seeing a 10-year treasury note decline quite a bit, which is something that I've been telling the Push and Profit private group for a while now to keep their eyes on, because the 10-year treasury note has a bit of an inverse effect with how it performs and how the overall market performs. Because if the 10-year treasury note starts rising upwards, well, we start to see stocks decline. Why? Well, we start to see this liquidity drain, because why would investors want to go ahead and invest in equities or in stocks when the 10-year treasury note has this guaranteed return? However, what we're seeing is it pretty much dip downwards, and we're seeing stocks go upwards. So this is something that we absolutely want to still keep an eye out for. But bringing the conversation to Tesla, we saw that Tesla stock pushed up in the pre-markets. However, once the opening trading session started, we saw Tesla stock pretty much slip downwards, and if we pay attention to the end of the day, it was relatively flat to the closing session in last Friday's trading session, which means that Tesla stock pretty much rejected in that exact area that I mentioned in yesterday's video, where I talked about a couple of things of Tesla coming from a technical approach. But before we go ahead and hop into my laptop and take a further look into Tesla from a technical aspect, there's some further things that we definitely want to discuss. For example, tomorrow before the opening of the bell, we have earnings from NIO, which is something that we absolutely want to pay attention to, and more specifically, we want to pay attention to their delivery guidance. And this is because it's going to reveal something about the EV demand in China. As we all know, China is having a bit of a mess right now, and we know that Tesla's one of their largest factories is in China, although we are kind of seeing that that factory is kind of becoming more of an export factory. But nonetheless, we want to pay attention to NIO's earnings, as it's obviously a competitor for Tesla. Well, I mean, it's hard to say that sometimes, but in reality, they are a competitor for Tesla, and we also want to see what's going on with China in a deeper look. But taking a look at some catalyst events today, we saw that Cruise is now beginning to test some of their vehicles in Seattle, Washington, which shows us that the race for fully autonomous vehicles in the North American continent is still an ongoing race. However, one of the things I want to point out is that if you take a look at, these companies like Cruise and Waymo, we see that their cars are equipped with much more sensors than what Tesla is actually equipped with, which means that even if they were to scale up and operate in multiple different cities, it still wouldn't be an affordable vehicle, simply because a lot of these sensors being added to these vehicles would make it much more expensive in comparison to Tesla only focusing on cameras and AI. And if you guys recently saw the live stream with Elon Musk on X.com, then you guys know that the new FSD V12, based on that live stream, has a tremendous amount of growth that's recently happened, and we expect that growth to continue going. But with that said, let's go ahead and hop into my laptop and take a look at Tesla a little bit more from a technical approach, and also discuss some ongoing economic events that we absolutely want to pay attention to as well. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and there's a couple of things I want to point out. Right now, in yesterday's video, I talked about an area that we wanted to watch out for, as I believe that is most likely going to be getting rejection, and that was around this area over here at this 240. Now, we did go slightly above it in the pre-market, but then we ended up closing below it, right? And I'm not here to say, oh, I'm Nostradamus and I call everything out right all the time. No, that's not the purpose of this, right? But the reason I talk about Tesla stock, and I mentioned things from a more dynamic approach, is because oftentimes there's a lot of zealotry, right, in regards to Tesla. And you see it all the time. You see it on YouTube. You see it on X.com. A lot of individuals will highlight any minuscule news or any minuscule catalyst event, and they'll say, well, because of this and this, Tesla's going to go to the moon. I mean, this is what happened right here. Tesla, Elon Musk took a photo of him with a car. And, yeah, oftentimes I do talk about those catalyst events, but I never say, well, because of this, Tesla's going to go to the moon, right? We like to go ahead and talk about, everything from a multi-dimensional approach. And so one of the things I mentioned yesterday is like, hey, I don't like this area right over here, as it looks like there could possibly be some resistance over here, and that's exactly what we ended up having, right? We saw Tesla stock rally up, and the minute the bell opened, we saw Tesla stock close, right? And while we at the same time saw a lot of other stocks go up, we saw Tesla stock pretty much move relatively flat from last Friday's trading session, right? Now, in yesterday's video, I talked about some economic events that we absolutely want to pay attention to, and I'm just going to do a quick recap for those of you guys that missed yesterday's video. By the way, if you're not subscribed to the channel, consider subscribing. I often do cover topics on Tesla as well as some other trading and investing topics, so definitely subscribe to the channel if you're brand new. And let's go ahead and dive into a couple of things. So, tomorrow at 10 a.m., we kick off with the job openings report. Now, this is often called as well the JOLTS report. And what the expectation is that the numbers are going to come out to be 9.5 million. What we want to see is anything below 9 million, right? Or just slightly at 9, right? Now, why is that? Well, we heard Jerome Powell in his speech recently in the Jackson Hole Symposium state that, yes, inflation's trending in the direction that they wanted to go, but they still want to see more weakness in the labor market. I know, it's crazy, right? Sometimes you question these central bankers because the 2% target for inflation is this arbitrary number that started somewhere in where is it that they call the Kiwis from, New Zealand, right? And they're really hard on that number now, and we're right around like 3.1%, and the Fed is like, nope, we need to see jobs get lost, and we need to see employment tick up a bit. Now, they're not saying that, but they're basically saying, hey, the job market is very robust, and we want to see that tight market loosen up a bit. And so what they're pointing to, or what some of the things we want to watch, is the job openings report. We want to see if it comes down, a little bit cooler than what the numbers are expected to come out. And if we do see that, well, we could see markets push upwards, right? Because now the fear that the Feds are going to hike in September is going to vanish, right? Because just a week ago, there was about a 36% chance, or the market was pricing in 36% of a chance for the Feds to hike in September. And after Jerome Powell spoke, or Fed Chair Jerome Powell spoke in that Jackson Hole Symposium, right? The expectations they rose pretty high to like 50-something%. I believe it was 52%, right? And so there's some fear in the market that, hey, these Feds, they want to keep their boot on the neck of the labor market, and they may do something crazy and hike again in September, right? So we want to see, this cool off, but it's a very jam-packed week. It's not just the job opening numbers. Wednesday we have the ADP employment numbers. This is kind of like the job numbers from the private sector. It's slightly different from what we get with the government numbers, but it's still important. It always comes out before, and so that's something that we want to pay attention to. And I hate to say it, but we kind of want to see jobs either remain flat or slightly decrease. Again, we don't want too hot of a labor market. Typically, you do want people employed, but in the case of the market fearing what the Fed is going to do, we don't want any hot numbers coming out, right? Of course, we got GDP revisions. For those of you guys that pay attention to the housing market, I oftentimes or sometimes talk about the housing market. We have home pending sales, but that's just a different topic. I don't want to go off tangent. We have, Atlanta Fed President Raphael Bostic speak. But I don't think this is going to be something that's going to be too big of a movement, or if any movement, for the overall market, as I don't think he's going to cover a lot of topics in regards to monetary policies in the U.S. But, just something that if you guys want to listen to, go ahead and feel free to listen to that. But what's going to be the big driving factor for this week is going to be the PCE index, right? And I often say that, everyone always pays attention to the CPI, the consumer price index, but the personal, consumer, or I can't even say it right. Personal Consumer Expenditure Index is something that the Federal Reserve puts a little bit more weight on, and this is the preferred inflationary gauge that they watch out for. And of course, we want to see inflation cool off, or, obviously dip down. Now, in my belief, I don't think it's going to trend down any significant amount, simply because one of the things that we're still seeing holding up inflation is, one, being shelter, and shelter is a very lagging indicator. It doesn't automatically just switch just within a couple of weeks. It takes time because, as I often said on the channel, people, for example, we're seeing rents come down, but people don't necessarily move every other week. Of course, there's some unique situations where there's divorces, people split, or personal reasons behind that, but typically it's a lagging indicator. And then of course service inflation is still up there, and so I don't think we're going to see much of a decline for this inflationary gauge, although fingers crossed that we do, because that would put a lot of optimism in the market, right? And of course we want to stay data dependent, so if we're watching Tesla stock, well, we want to see these data points that are going to be coming out, because that could push Tesla stock towards a higher high, or not a higher high, but obviously start moving upwards from this direction of us pretty much trending downwards for a while, right? Again, then we end up getting non-farm payrolls, unemployment rate. We get all this on Friday, U.S. hourly wages, and a lot of good stuff coming out on Friday. And then this is also something you want to pay attention to if you're watching the housing market. But again, it's trying to stay on topic, right? I jump around sometimes. But let's go ahead and highlight something, or some areas we want to pay attention to for Tesla this week. But actually, let me go ahead and show something that I shared with the Push and Profit private group this week. So I showed this pretty much a snapshot from Bloomberg, where basically September is typically the worst month for the S&P 500 on average in the past 3 decades. And I do want to put like a label here, a cautionary sign, that just because September typically or historically has been bad for the overall market, it's not indicative that this September is going to be like that. It's just something that it's interesting to watch. There's a lot of reasons for this, right? Because a lot of mutual funds, they end their fiscal year in September, and so they may end up closing their positions. Also, what I've mentioned for August is one of the slowest months for the market, right? Because a lot of European fund managers, they go on holiday, right? I know, right? Europeans, they're so much more luckier than us with the amount of time they get off. But they go on holiday in August, and then they come back in September, and that's when they start to reevaluate their positions. And so we see a lot of movement during September. And of course, there's a few other reasons. I'm not going to label or kind of pinpoint every single reason why we see a lot of activity in September. But September is when things start going again. And typically, or historically, let me say, we've seen September be a bad month. And so this is something we want to, just kind of keep on the back of our minds, that it could be another ugly September. I mean, if you guys remember 2020, let's go ahead and take a trip down memory lane. Or actually, you know what? I don't want to just make this video any longer. You guys can do that yourselves and just take a look at, just 2020, or might have been 2021. But regardless, let's go ahead and talk about these areas, right? And let me go ahead and put the volume profile here, as that's something I often say. So, I like to keep a bear approach and a bull approach in regards in the short term. Now, to avoid any confusion for anyone, I'm not a bear on Tesla. I am bullish on the long term for Tesla, and I do have exposure to Tesla in my long-term portfolio, both from the individual stock. I don't typically invest in individual stocks often. Tesla is one of them. But I also have exposure to Tesla with a lot of the index funds that I invest in. I invest in a lot more index funds than individual stocks. And even in a lot of those index funds, I have exposure to Tesla, right? So Tesla, I would say, is pretty much the stock that I have the most exposure to. And so that's why I talk about Tesla often, right? And so, if Tesla continues to fall down, let's go ahead and cover the investing approach, right? Well, I want to do the same thing as I did recently, right? I like to buy when things are selling off and then wait for that sign of a bounce. And so that's exactly what what I ended up doing for my portfolio, right? Tesla stock, I talked about it selling off from the earnings, from a fundamental standpoint. We also talked about it from a technical standpoint, being rejected from this descending trend line. And I didn't buy Tesla all the way until it bounced up from this area over here, showing that it was, confirming a little bit of an uptrend. And I added more into my position, right? But I don't, as I mentioned in previous videos, I don't think Tesla is going to go into all-time highs just yet. There could be some more consolidation and possibly some more selling. And if that happens, well, as an investor, well, cool. I'll just get some more shares of Tesla on the discount. But I'm not going to just buy when things are just selling off, because you could catch a falling knife and it just keeps falling off. I like to wait for that sell-off and that confirmation. I have several videos on YouTube talking about how to identify the confirmation. And I also break that down in the Push and Profit program as well, right? We cover that in one of the videos in our lesson library. So if you guys are interested, check out the links in the description below, because one of them is to join the Push and Profit private group, but there's also another link that I don't believe many are aware of, and that's the link to my free weekly newsletter where every Sunday I talk about what's going on in the overall markets and what are some things we should pay attention to as market participants. But going to the meat and bones of this video, right? So if we have good data this week, right, looking at the economic calendar that I kind of broke down, and we do see Tesla pushing upwards, well, the area that I'd want to see or keep a close eye on Tesla would be this 258 area. Why? Well, we know that that's an area where there's a lot of volume relative to price, and we know that when there's a lot of volume relative to price, that means that there's a lot of exchange between buying and selling, and so that could cause somewhat of a resistance and somewhat of an area of consolidation. And from there, we'll reevaluate what's the next move, being dependent on the data and what's going to be coming outwards. Now, that's the optimistic view. That's the optimistic perspective that Tesla continues going up to that level. Do I think that we're going to have positive data? I don't necessarily think that the labor market data that we're going to get this week, along with the PCE report, is going to be enough positive data to push us up there, right? Again, I could be wrong. I don't have the data in front of me. I don't have a crystal ball, and I do want to put this disclosure out there that although I've been dead accurate not only with the Push and Profit private group since last year, but also publicly on YouTube about Tesla, talking about the rally from the beginning of the year and the selling pressure over here after the earnings, I do want to disclose I don't have a crystal ball, right? I just try to look at things from multiple data points, and I reevaluate what do I want to do, both from the perspective of an investor and a trader, right? And so with that said, I don't have the data in front of me. It could be bad, it could be good, and based on that, we'll go ahead and see what ends up happening. But I don't think it's going to be great. I don't think it's going to be great data. And I do believe that we may continue to see more selling pressure for Tesla. And one of the concerns is we're at this area over here where there's less volume relative to price. And so if there is selling pressure, well, it could fall down dramatically. Just as inversely, when there's buying pressure and there's very little volume relative to price, well, you see price pretty much picking up drastically. And so if there's an inverse of selling pressure, well, that could be a concern, right? I'm not too bearish on Tesla. I don't think it's going to go down to like $100, although I have seen some individuals comment on the channel saying that Tesla needs to fill this gap. When it comes to these gap fills, one of the things I often say is that it doesn't have to fill a gap, right? A stock, if it gaps down and then eventually goes up, it doesn't necessarily have to fill a gap. But if we end up falling down, that could be something that we'll talk about in the future. But I think that's far off from where we're at now. And right now, we just want to stay data dependent and watch for this economic data coming out this week, along with the news or the update from NEO. And the concern is if we do have selling pressure, well, it could be steep selling pressure. And obviously, we're also entering into the month of September, which historically isn't the best either. So a little bit of a caution, warning here. If you're an investor, just keep doing what you do. If you dollar cost average equally every single month, that's another approach. You could by all means take advantage of that. But if you're someone who likes to drop lump sums in, well, maybe this might be an area where you could finally sit on the sideline, wait for some more selling, and then after that confirmation of the uptrend, buy into Tesla again. So we may have some great opportunities from an investing standpoint. And if you're trading Tesla in the short term, we may have some great shorting opportunities as well. But I'll keep you guys updated again on this channel as I often do. With that said, hopefully you guys found some utility in this video, and I'll see you guys on this next video right over here. Take care, guys.